It is 2 hours before market open on November 11th, 2021. Yesterday, the market absolutely tanked. Everything's red and ugly. Tesla's up, but only recovering a little bit from being down with the Elon tweets a couple days before. So, kind of looking for a little bit of bargain hunting out here and saying, what do I see? I did see where Zillow tanked badly after the announcement that it was getting out of house buying and selling. OpenDoor is just in that business, and in the last week it's gone from 25 to 19. So the question becomes, is this the right answer? So I did a little bit of digging on OpenDoor, and they just announced their earnings yesterday, and they have no earnings. They're still at a loss. You can make the argument that, gee, it's a startup and startups lose money while they get going. I'll get into that in a second. The other thing is, where did OpenDoor come from? They've actually been in business since like 2013. They went public this year. They went public as a SPAC with Chamath. Those that have been his followers and invested have kind of gotten burned, whether it was with Virgin Galactic, which he made some good pipe money and IPO money and then exited, and now it's down. Clover Health, which again he was in the SPAC, and the SPAC pipe money is there, and then going public money, and then it was suggested to be a fraud by I believe it was Hindenburg Research or one of those shorting houses, and it's just never recovered. So the question becomes, is OpenDoor another one of those, or does it actually have a chance? The one thing I know about buying and selling houses after doing it a couple of times is when house prices are rising, anybody should be able to make money, because you buy the house here. If you had bought it in January and the index was at 316, this is the U.S. Fannie Mae housing index of what they're seeing for pricing and pricing inflation based on some prior base index. So in theory, if you bought it in January at 316, the average house 2 months later when you sold it was at 325. So even without flipping or doing anything, housing prices have just been, like everything else in this market, inflationary crazy, and OpenDoor didn't make any money. So they're selling dollar bills for 95 cents in a market where those dollar bills are getting to be worth more and more value. The question I have is, if interest rates go up, buyers don't have as much money, or if the market turns sour, what happens if they're in one of these 2008 markets where as they buy it, the market goes down and down until they get rid of it and there's stuff for sale everywhere? In theory, maybe they can buy stuff at some great discount, but in a falling market, they're done. And they won't be like Zillow, who can say, gee, we're not making money at this even in the best market of our business potential existence. If you look at what housing prices are doing right now, this is unprecedented. This isn't going to be happening, I would think, again. So Zillow got out, but they had a different business to fall back on. OpenDoor does not have a different business. This is the only business they're in, buying and selling houses, and they're competing with realtors who do it on the side, contractors that do it on the side, landlords that do it on the side. They don't know those local markets like those local players with local relationships do to get the bank buyouts and those kinds of things and the low cost work and repair. So what's going to happen? My assumption is that even though this thing did tank greatly, I think it's going to end up looking like a Virgin Galactic, where it just keeps tanking down and down. So when I go and look and say, what are the options out there in the world? If I go to OpenDoor and go to big charts, go to the options chain, rather than going into my trading software, and go out a little bit of distance, how much does it cost to get an option out here on a put? They actually have some out in 2024, so you give some more time. There's no volume out there, so you you could potentially buy a $15 put for somewhere between $4.50 and $7, probably $5. And sure enough, the last one was $5 for 2024. If you go out to 2023, January, you can get a $15 put for bid and ask is 330, 360.90. So if you put an offer in at 360 or ish, it should go. And there at last was 360. So do I want to wait till June of 2022? I think you want to wait till the end of summer next year to see what happens with the housing market next summer. $15 option at 360 means it's going to have to be below $11 or so to really come out well. Let's see what this looks like. But if it even starts to fall, if I put in an option for today's stock price, yesterday's stock price, they're saying the option price is $390. Let me say $360. And calculate that. And saying that the price now is $19.33. What if that price falls to $15 pretty quickly? In the winter, you'll triple your money according to the expectations of optionprofitcalculator.com. If it actually falls as far as $10, then you're going to make some serious dough over the 2 years. So I'm going to go ahead and I'm going to put in an offer to buy January 2023 contracts, and based on them not generating any profit during this peak supermarket, even though they tanked badly yesterday, I'm guessing they're going to tank further, which means if I don't get this option bought quickly on open, it's going to get expensive fast. So the 360 yesterday, the bid spread was 330, 390. I might just jump right in at 390 at open. So we'll see what happens with the open. But that's my move for today. I want to try and do some of these videos here and there when I see a chance of something that looks like it's a volatile opportunity. If I'm playing options a little bit, I should try to document it a little bit. Again, remember, by doing a put, the only thing I've got at risk, and if I buy that option for 360 for 100 shares, it's a couple $100 for the option contract, but the only thing I can lose is the option contract, as opposed to shorting it, where if the stock takes off, you're going to get killed. So feel free to tell me what you think about OpenDoor, if it's an excellent short opportunity or if I'm missing something, and we'll check back later in the comments and update this as the trade moves along. Thanks for watching. If you're interested in seeing me do more of this kind of stuff, hit subscribe. Hopefully I get better at it. This is number one.